Welcome to Picture Perspective. My name's Jordan Kennedy. Before we kick off, this is general advice in nature. Should you wish to seek out personal advice, please reach out to your advisor. Let's go. It's my pleasure to welcome Lauren Hosie, my fellow partner, to talk all things PAFs. So Lauren, talk to us about PAFs. What is a PAF?
Thanks, Jordan. A PAF is a Private Ancillary Fund, as you mentioned, and it's a type of charitable trust that is used to, people make donations to it in a tax-effective way, and then they can hold on to those donations within the trust and distribute to beneficiaries who are charities at a later point in time.
So Lauren, what's the primary purpose of a PAF?
So the primary purpose of a PAF is to provide certainty to families who are looking to make charitable donations into the future.
So Lauren, what are the different ways to make a donation?
Yes, there are a number of ways that people can make donations. And the most common one that people are familiar with is you'll make a donation, at a shop to like the Red Cross, for example, and then
$2.
Yep, great, and you'll get the little tax receipt, and then you can claim that in your tax return. Another way that we see people looking to make donations, or bequests as they're more commonly referred to, is through their wills. So when someone drafts their will, they might decide when they pass away that they'll leave a bequest to a charity at that point in time. Or the other option that people have, which is what we're here to talk about today, is that people can make a donation that goes into their Private Ancillary Fund, and then later down the track they can choose to donate that money to a beneficiary.
Underlying beneficiary.
Yeah, of the trust.
Lauren, why is timing such a factor when making a donation?
Yeah, so from a tax perspective in particular, making a donation can be a great way for people to fulfill a number of benefits. Obviously, they can get a tax deduction, but they can also have that benefit of giving back to society and to charities. So there's another thing just to touch on with that can happen with donations is that you might make a donation one year, but you may not have the taxable income in that year to offset the donation. So people can actually opt to carry forward a donation for up to 5 years and claim it in the year where they do have taxable income to offset it. An example might be they could have quite a life-changing event, which might be, selling their business or selling a property or something. And in that year, they might choose to make a donation. And what we're seeing more of is that, particularly with these large transaction type events, that people are looking towards potentially making a donation to a PAF.
Yeah. And it also means that they're not having to make the decision on day one who the ultimate beneficiary is, but yet they get the tax benefit, they can control the asset, and then make those decisions later down the path.
Yeah, 100%. So yeah, they're getting that upfront deduction when they really do need it against that taxable income. And we're also providing that certainty that that money will go to charity at the end of the day. The difference is when you leave a bequest as part of your will, obviously at that point in time when the person does pass away, there's got to be adequate funds to be able to make those bequests, and other discussions would be had. So if people are really looking to leave money to charity, I think doing it whilst they are still alive, unfortunately, is a good way to look at doing that from a tax perspective.
Yep.
Yeah.
Lauren, talk us through the steps in setting up a PAF.
Yeah, so one of the first steps in setting up a PAF is we do need to establish a trust, and as part of that, a trust deed will need to be set up, and a company will also need to be incorporated. So we look towards our in-house legal team to help with this setting up of the trust deed. And then from there, we need to work through the registration with the ACNC to have the trust set up as a deductible gift recipient. And we also then will work with the ATO to get the tax exempt status and the DGR status as well.
Does a PAF pay tax?
Good question. No, a PAF does not pay tax. So any earnings or any income that a PAF receives are all tax-free. That's why it has the tax income exempt status from the ATO. However, one of the main benefits of having a PAF is, depending on how those funds are invested within the PAF, is that the PAF is entitled to a refund of any franking credits that it receives on the investments made.
So Lauren, what are the annual compliance requirements for a PAF?
Annual compliance requirements for a PAF are that they do need to submit either audited or reviewed financial statements each year. That will depend on the size of the PAF at the end of each financial year that will need to be assessed. In addition to that, they will need to submit the annual information statement with the ACNC. and that's typically due by the 31st of January each year. As well as that, each year at the end of the financial year, all the assets are brought to market value as part of the preparation of accounts. And then that value is used to determine how much the PAF needs to distribute at the end of the financial year.
Yeah.
And that number is currently sitting at 5%.
Yeah, which there's a bit of conjecture about that at the moment.
Yeah, you may be aware of some recent articles in the AFR in relation to some lobbying going on and whether that percentage needs to increase. It's been spoken about increasing it from 5 to somewhere between 8%. There's billions of dollars actually at the moment tied up in private ancillary funds, and I guess some people in the community are just asking whether those funds should be released more quickly to charities.
And I think that's because we've had a number of good years in financial markets and we've seen returns in excess of the 5%. So although money's gone into a PAF, it's earned, we've distributed out to charitable beneficiaries the 5%. If we're exceeding a 5% income and growth return, which we have been seeing, these pools of assets are actually compounding and growing to quite significant balances. So we're never actually running them down, and the beneficial charities are never actually receiving all of that money. So it becomes an intergenerational issue, because a PAF might be seen to be run by the patriarch of a family, but never start to erode into the capital balance. So the next generation then has to get involved and continue to carry this forward. Yes, a family can then elect to, pay it all out in one go. There's nothing stopping a family winding it up and going down that path, but it is a really interesting issue that returns have been well in excess of the minimum requirement to pay out.
Yeah, and I think the upside from that is that charities in the long run will actually receive more donations, because instead of someone giving $100,000 to a charity directly, they may end up giving $200,000 through their PAF to that charity over a long time.
And the other thing which I've seen which has been quite interesting, is some people might have philanthropic endeavours for certain charities that are juvenile and that are not ready to receive the money. So they're not willing to give significant amounts of money on day one, but rather progressively, as they see those beneficiaries start to utilise and build incrementally with the donations that they're receiving, they're more prone to give more over a longer period of time, as opposed to a smaller amount at the beginning. So Lauren, one of the fun things about setting up any entity is about choosing its name. How do you guide clients about setting up a PAF and choosing a name?
Yeah, so we always have a conversation with them because obviously the name will be, it is in the public domain with a charity, and also all of the information that we lodge with the ACNC is also publicly available as well. So, but some families do opt to go and name the charity after their last name in particular, as a part of a legacy, particularly for their family, while others choose to keep that quite private and might go with a different name. Also, a very important role I should mention as part of a PAF is they do need to have a responsible person, which is somebody who's separate from the family on the PAF, who is also part of professional bodies as well.
Yeah, I think back on the name thing, it's been a really interesting one. Some people like having their name out there, like having their name on a building, or like having their name in an annual report, because it tells the story and the next generations get to hear the good things that the family have done over time, and that legacy continues intergenerationally. Some families don't. We've experienced a number of families that don't like to get harassed, that are very private families. They don't want everybody to know the level of wealth they've got and their philanthropic endeavours. They want to be private and subtle. So again, choosing the name and how to sort of guide them through that is really important, as well as some safeguards around getting chased. And I know this sounds really horrible, but once you've made a donation once, you're on a list. And unfortunately, charities will continue to ask the question, when do you think we might be available again? So a lot of families that we look after try to put in safeguards and measures such that they're not harassed continually, but rather they're choosing and selecting their philanthropic endeavours based on their own desires and cadence, as opposed to somebody hassling them for that. So choosing names, how correspondence is brought through to a foundation is really important. The last thing I wanted to talk about was engaging a family. There's a lot about intergenerational wealth transfer, education, and all those wonderful things that we're passing on to the next generation. We've seen a huge uptick as wealthy families have started to use PAFs as an education tool and teaching the right moral compass to their next generation by involving them in part of the PAFs administration. What's some of the roles that we've seen given out to family members or younger members of the family when operating a PAF?
Yeah, so PAFs are quite highly regulated, which I think is a great example for younger people to see the involvement as well. So they do have board meetings as part of their annual compliance, and bringing some of those younger parts of the family, younger generation, to be involved in those board meetings and to help make those decisions as to where is their family's money going to go for charitable purpose in the future. Because we do typically see that there are different interests amongst a family. So I think getting them involved in that is really important. Yeah,
and I think it's also interesting as a young person growing your wealth as opposed to the next generation who's trying to be the older generation trying to be philanthropic. That whole push and pull about donating versus retaining and growing is a real challenge for most families. So the younger generation seeing the money pass out over time and engaging with the charities is a really important thing. Lauren, thank you very much for joining us. Thank you everybody for listening in. I hope you've enjoyed this perspective and you've learned something. Please like and share with your friends. Appreciate you listening in. Thanks very much.